All right, hey GT, there we go. Test, test, one, two, three. Okay, we're good to go. All right. Hope you guys have all been having a good day. I know. Oh, here's Loki. I know you wanted to see him. Hold on a second. Yeah. hmm Well, there's Loki for you. He's having a good day. It's snowing out here in Washington right now, so he's just like really hyper, really excited. He's been having a lot of fun these past few hours. He knows I'm talking with you guys, so he's getting more excited about it. Let me do this very fast. There we go. There you go. All right, but hope you guys are doing well. Let's go back onto that chart page here. There we go. No, not that one. Stream page. All right, so today we'll do a lot of stocks, a lot of crypto, whatever you guys have as far as questions. Let them fly, and I'll answer them in a few minutes here. Um, One of the big things I want you guys to understand about this week here, and hey, Bideford, hope you're doing well. Oh, I'm glad it's snowing. Oh, as long as it's not too much here. Um, as far as what's going on in the market here, this is a monthly chart for the Nasdaq right now. You guys can see that we clearly are in this downtrend. We got rejected off of this downtrend again here. Although we started off at a pretty good spot, right? When the new month chart opened up, we were right there ready to explode and possibly test out this next resistance zone up here around $13,000. That obviously did not happen because of some comments from the Federal Reserve. People starting to realize that, oh, maybe it's not going to be a soft landing after all. Maybe inflation, maybe rates are going to be high for a longer period of time, and they're not going to be cut within the first few months of the year, right? I think a lot of what we saw here was people assuming that we were going to have a V-shaped interest rate cycle, going back to Fed rates chart. Oh, I got too much stuff on my desk right now. Nope. Uh, Fed rates chart. Okay, right here. I think people were just assuming that we were going to do this. Let me go over here to what we have in the 80s, where we kind of spike up and then we just come right back down. I don't think that's what we're going to be doing now, unfortunately. We're going to be going back into a system where we're up here for a prolonged period of time, and then we're just going to stay steady. Something like this, right? And just going sideways until inflation comes back down. And that's going to be the goal of the Fed here, because as they said numerous times, and I guess I believe them. The market itself didn't believe them, which means the market's right because the market's always right. I guess you would say until it's not. What's going on now is the market is just adjusting to that realization, saying, "Whoa, there might be more pain than we thought going on here." Right now, we got the Nasdaq here. You can see right now. Let me go right here. You can see that we're kind of testing out this 50-month moving average. I bring this up because normally we don't talk about these longer term moving averages, so like the 20 and the 50 for the monthly charts. But, they've done okay over time. You can see the 20 had some hiccups back here in 2018. But for COVID, it managed to hold over here. It's been holding a little bit. And during, towards the top of the market here, we were actually holding for just about 2 months, I would say, before we eventually gave out. So, one of the things I'm more concerned about here, following up the rest of the year, in which we have maybe about what is this? About 2 weeks left, a little over that. If we close down below this 50, that may start a worse cycle here. I've been trying to treat this as more of a traditional technical market. It's very irrational, so I want you guys to understand. Even if we do that, like if we do break down like we did over here in 2001, or we did over here in 2008, it might not lead to the same downward pressure. I was assuming that it was gonna do that a while ago, and we just didn't have it because people weren't looking at economic numbers or earnings or stuff like that. They're primarily looking at inflation and Jerome Powell raising interest rates. I have never lived through a period of high inflation before, so I really didn't understand that. I was thinking, hey, technicals are technicals. I've lived off of technicals for years now, and they worked out very well. This is my first high inflationary event, if you will. And because of that, I'm still kind of learning this stuff as well. I do believe if we do break down here and earnings start to go sideways, we are going to have a pretty big capitulation moment sometime in Q1 and Q2. I'll be waiting patiently for that to happen, but until then, I really am going to be doing short 1 to 2 day, maybe 3 day swing plays here. And then on top of that, I will be doing a lot of day trading, So just to keep that in mind here, excuse me, what we're going to be watching for the NASDAQ this week, and this will apply to all the different stocks in the NASDAQ, and then when we talk about the SPY here in a second, everything related to the SPY as well here. I want to see if we really can break down and close down below this $11,118 level. All right, that's just one thing. By the end of the month, I really want to see if we can close above that. If we don't, I would most likely start going more aggressive on the put side when January rolls around. Now, going over here to the weekly chart, you guys can see we just broke down below the 200 weekly moving average again. We are going to have a death cross coming up in January. That's not going to be a good sign anyway. And you guys are also going to see this 50-week moving average coming down here as well. Excuse me. Whew. I think I need water, but I ran out of it. All right. But so we do got some more bearish moves coming ahead of us, guys. That's just kind of like the forecast for the next few weeks. It should be pretty bearish here, or next few months, excuse me. Now, on the good side here, we do have a little bit of a support level right around here from back in June. We're going to come back down to those levels and see what happens. That's around $11,037, just around $11,000. However, we do have this nice uptrend here. This goes from the lows we experienced back in October after we made new yearly lows up to this next little higher low that we had around 10,645. I might buy some calls on the SPY and stuff like that if we manage to bounce from there, or when we come into contact with it, excuse me. But mostly, I'm saving a lot of ammunition for day trades and not too much on the swing trade front. I believe on the day we do tap down on this, there is going to be a bounce. That bounce is going to be an easy few $100, depending on how much you guys want to trade on an options play, okay? Now, this isn't going to be that complicated. We're still coming back down. I expect us to have a bounce, and then it should be a shorter-term bounce, I would say. Some of the stuff I want you guys to pay attention to this week. Oh, it's resetting here because I haven't been on the page in a few minutes. You want to go to the next one. Here we go. There's a few economic indicators coming out just in case you guys want to have a look-see later on. Monday, we have the Home Builders Index. Tuesday, the building permits and the housing starts. Not too interested in those two, but the first one on Monday, sure. On Thursday, we have jobless claims, gross domestic product revision, just so we can see if there's any issues with it. Apparently, a lot of job numbers from Q2 were grossly exaggerated here going into the election. So people might have thought that the job market was much stronger than it actually was. So we'll have to see how that gets sorted out here pretty soon. And then one thing that happens on Friday that could actually give us a really bad day or a really good day here is PCE price index, core PCE. We normally look at PCI or CPI. CPI is what you are spending your money on. How much things that you spend your money on, or how much are they going up? The inflation. PCE, excuse me, is that same thing, but for businesses. So how is inflation affecting businesses? And that usually influences CPI, right? Because if their costs are going up because commodities are going up, they usually pass a portion, if not all of those expenses, onto their consumer, okay? So there'll be a big day on Friday as well, so we'll keep track of that as well. There's some other stuff here: real disposable income, durable good orders, core capital equipment orders. I'm not too interested in that, to be honest. Oop, just kicked my desk. But the PCE, I think, is going to be a surprise thing to look at on Friday, okay? It shouldn't be too big. You got right here, core PCE price index. Looks like the estimate is around 0.2%, but year over year it should be around 4.7%. So we're going to keep track of that. Notice how this is lower than what the price of most goods is. Excuse me. All right. Now, if you do want to put down an alert, you could put one right here. So if we do come into contact with it, you could choose to either buy that day, because most likely it'll form some type of cup in the market, or you guys could just wait to see if we are going to close down below it. You guys could do some type of swing play for 3 days or so, where we break down, you buy towards the last half an hour of the day when you know it's a confirmed breakdown, and then you hold for another 1 to 2 more days after that, because you know a death cross is going to be coming between the 20 and the 50 if we really do break down sometime by Wednesday, I would assume. Okay, so that's one alert I would have for you guys right there. As far as the SPY is concerned, let's start off with the monthly chart here as well. Let's see. Energy, I'm really scratching my head on how we ever get back to 2%, not 2023. I can't see it. I have another, it was a builder doing that. What do you call? Oh, that must have been kind of fun. My mom knows a lot about electricity stuff because she used to be an electrician, but nobody in my family has ever been builders besides Boeing builders, I guess. Let's see. So, similar stories to what we've seen with the NASDAQ here, also resting above the 50-month moving average here. Let's go over here very fast. A little bit of a different story here as far as the 2008 financial crisis and the dot-com bubble being here, financial crisis going over here. We're getting closer and closer again to potentially breaking down below these 50-month moving averages. I'm not putting as much stock into these ones, but I do want you guys to know that they're there. We broke down below it on COVID, kind of a freak technical event, but we did break down below it. On the weekly charts here, I'm, again, just reiterating a lot of the stuff with the NASDAQ. I still am pretty concerned about what's going to happen here the next time we hit a death cross. Because, the more we look at this stuff in hindsight, the more we're like, wow, that was really a bad sign back in the day, right? Just a few months ago. Remember, I was one of those few YouTubers out there just hollering and screaming about, not hollering or screaming, but, informing you guys about death crosses on the weekly charts and how they're usually a lot worse than those in the daily charts because it shows larger trend shifts that aren't just on the day-to-day but week-to-week, which is a little bit more drastic. Over here. Since we had that death cross, let's go over here. The price fell down about 18%. Now we're back up to 9%. Next time that happens, we're going to have the 20 cross down below the 200 and the 50 cross down below the 200. Those really shouldn't come to pass until, let's just try to keep that same shape there. Maybe this creeps down just a little bit, maybe. That shouldn't happen until May. So that might even suggest a longer, worse summer if we really do get into a bad situation. The only way I think this really gets fixed here in the long term is it's not even that. It's more like there's two things that can happen here. The one I just suggested where we have a worse summer, that one's the least likely in my opinion. Maybe a worse fall, summer type of scenario, that might be the least likely here. But, you see the death cross happening in May, so that might suggest, oh, wow, it's going to have a hindsight effect here that we're going to have another drop down in that same quarter here. All right. The only problem I have with that here is if you go back in time a little bit, here's S&P during the financial crisis. Let me see if I can put a little bit of a positive line on here. By the time that crossover happened, we had already dropped, if I can spread this out for you guys a lot, we had already fallen down a lot by that point, and it just dragged it down. We did end up coming back down a little bit more, right? But this wasn't an inflationary event. This was an economic event due to financial crises, homeowners, and stuff like that. So it's going to be a little bit of a guess on my part, I guess at all of our parts. But I'm hoping that by the time it happens, we're not going to be having such a large drop like that. Maybe we might come over here, have a nasty drop, and then we may go sideways, and then we keep on going on. Because the forecasts don't call for a very bad recession, I don't think we're going to have this type of an event or this type of event. I think we may stop somewhere around here and then chug along like that. And stop somewhere around here and chug along like that. Not necessarily have that second dip. We could, definitely, guys, we could. But it'd be more, for me, it would only happen if we really do get to that bad economic recession. Which at this point, since I'm not an economist, I usually trust the people on Fox Business, CNBC, and Bloomberg, excuse me. I usually trust them with this type of stuff, even though they've been kind of all over the place. Most of them say it's going to be, at worst, a moderate recession and not something where we see unemployment go into the 6%, 7% range. Let's hope that doesn't come to pass, because then we might actually have one of those larger capitulation events where you see the SPY right here, not as much as the NASDAQ.com bubble, but from high to low here, it fell down about 50%. High to low here, it fell down about 57%. High to low currently, it's 21%. If we fell 50%, that would bring us back down to what we experienced during the COVID lows, and that would be a lot of pain in a short amount of time, to be honest, all within 1 year. And then afterwards, we'd pick ourselves up by the bootstraps, and there'd be tons of buying opportunities. But man, that would really prolong any bad news that we had. That might be the catalyst for a rate cut, but I just don't know who's going to blink first. I wouldn't assume it's going to be the Fed because he wants to do that 2% inflation. And going back to what you were just saying, GT, you don't see us getting back to 2% in 2023. Well, that's the big thing here. That's the big thing. Let me back out of this very fast. Maybe just this part. Okay. So you can see we were pretty low for COVID, obviously, during 2016 when Trump came into office, raising interest rates because, you never know when you're going to have a recession or something like that. But basically, the economy was going stronger. I think Trump passed a few, some bills related to, tax cuts, stuff to gear the economy up and get it pumping up. And then what does the Fed want to do? It wants to slow down that hot economy by introducing rates. It's perfectly fine. You want to stop the spending of money. It's yada, yada, yada. It's fine. COVID happened, bing, bada, boom. We all know the catastrophe that happened there. And then when inflation came back up, now we're starting to see soaring rates. You see up here towards 2006, before the economy crashed, you see how we had a flattening off here of around 5.25 basis points. Well, imagine that happening. Okay, between 5 and 6. I think the average right now people are expecting is somewhere in the same range of 5.25, 5.5 basis points here, or just rate. Instead of it only lasting for like I don't know, like a year. What is this? 2000 July, somewhere in there. Oops, I dragged when I shouldn't have dragged. We may have something like that, but in a longer time frame. And so far, this is what Jerome Powell has said. He said that if it's going to come up, if he has a choice to make between a suffering economy with high inflation, or to deal with high inflation, he's going to let the economy suffer even more to make sure that inflation rates go back down. That's where a lot of this pain could come to a headwind, or to a head. Excuse me. Right now, I would believe that Jerome Powell isn't going to blink. The one thing that concerns me here as we kind of go all into this and how we know it's going to be a bad time, can I have a calendar here? Calendar. Can we go? I just don't like these calendars. Year. There we go. Okay. We are right here in December of 2022. 2023 is right here, right? Well, we're going to have a bad economy throughout this whole year. It's basically, where do we bottom off at? Towards the end of the year, even towards the middle of the year, elections are going to start picking up for the 2024 presidency and, House and Senate races and stuff like that. Jerome Powell has to be aware of the political reality that he's in. He may be forced to cut if Biden decides to exert some pressure on him. But we'll have to wait and see how that all blows over. But I know it's kind of crazy to think about it. But people are already thinking about that 2024 election. I know Trump is going to be running. They say Biden's going to be running. Kind of what we learned over, I guess, through those Twitter files and stuff like that. People really don't like Trump in positions at the institutional level, like the IRS, State Department, those type of things. They just don't like him. And they kind of work against him in subtle ways, right? Through Twitter, whatever. I think they'll try to get the economy back on track as fast as possible to make sure Trump has the least likely chance to become president again, because they fear what may happen if he does become president again, right? But that's if, I guess, he defeats DeSantis and all those other people are going to be running against him as well. But the economy is going to be a big factor this time, And remember when Trump came into office in 2016 and he was campaigning in 2014, 2015, he talked about the economy a lot, the haves, the have-nots, the system is broken, the system is corrupt. That was his message, and it resonated pretty well across America, especially through uh, middle America. I don't know what you guys want to call it, but middle America, blue collar towns and stuff like that. I know that there's going to be some talks about that behind closed doors as far as the Federal Reserve is concerned, because remember, a poor economy technically is still better than uncontrolled inflation, right? A bad economy where like 6 or 7% of Americans have no jobs, that's still better than dealing with 5%, 6% yearly inflation. I just assume it's going to come down quite a bit, so we can at least start cutting rates maybe by early 2024. And hey, Ken, hey, Alex, hope you guys are both doing well. And hey, Corinna, happy to see you back. But yeah, it's going to be very hard to get back to 2%. It really is. That's why I keep on saying be careful of he might just have to keep those rates up for a while. I haven't been around. I hope all's well. I got to catch up. What's new? I've been doing more videos lately as far as like what's going on in the finance world. I've been making fun of. I've been making fun of Kevin O'Leary quite a bit, and it's been pretty fun. Mostly doing videos and covering articles and stuff like that. I've been sending out a lot of emails trying to get people to interview for the channel. So far, nobody's responded, but I guess I just started sending mass emails yesterday, so maybe everybody's at home, not actually working this Christmas week, which I totally understand. But mostly just doing a lot more on the video front of things, having some fun with that, but it's been pretty nice. Big news from Jerome Powell and CPI data last week. That's about it. But basically, the market is thinking all of a sudden, wow, maybe we are going to be heading for a recession instead of a soft landing. And the market is just trying to price that in at this moment in time. Do I think Tesla is due for a bounce? Ooh, okay, we can talk about it. It's a little bit more difficult just because there's so much news swirling around Elon that it makes it more of a day trader's paradise, but not much else. Because look at this. We just broke down below that 200 daily moving average there. I mean, that was a big level of support, and because Elon sold off a lot of stock shares, a lot of shares. Let me go over here very fast. There you go. He sold off like $3.5 billion worth of assets right there. It's put a lot of downward pressure on the stock price. Plus all the stuff going on with TikTok. It's also adding to a little bit of confusion about Twitter as well. Plus the slowdown in the economy. And then other thing is like Elon's been like flopping on Twitter a lot lately. I think he just rescinded a ban or something a few minutes ago. He's not laying down the law. He's kind of swearing with public opinion, which in and of itself is kind of controlled by just weird forces, right? And by that I just mean people are just weird, and we don't really like know what we want. We kind of flow. Everybody's like we're like water, right? But as far as Tesla's concerned, we are getting into a support range here where it should start to bounce. So if I go over here to the monthly chart, kind of just zoom this in a little bit, you'll see that we're heading for a couple support levels. First one's going to be right around here, around $126. But really, it's just this range that we've kind of entered into. So if you wanted to play a bounce here for maybe January or something, you could. But I mean, look at this. We're breaking down below the 50 moving average. On the weekly charts here, like I just said, we're breaking down below the 200. That fine line that you may be looking for, it starts off right here. We closed down below that, unfortunately. The next support level that I really see is right around here, around 126. I mean, and that's just so far away. Just because, Tesla boomed so fast, like so fast, that you see we have like another $25, another 17% before we actually have a solid multi-week bounce there. What I'd be looking at here is, let's go over there. Let's get the magnet. Held for one. Over here it's $106. Let's bump this up though to get the lag off, or it's going to log off. We just broke down. What about this one? We have one down here that's around $138. That might be your next best level, but it's getting very, very difficult to want to buy Twitter for a bounce. That's why I've been primarily doing a lot of day trading on it, because the day trades have been fun. Everything else has just not been going my way. So you can see right here, the last trade I made as far as swing was this breakdown that we had, right? And I bought some right here. It took a few days and it kept on going back down to around 210. That's really the last trade I did, and I was terrified the entire time holding it, because as you guys can see, right as that was going on, we were about to have a golden cross here. So I was really hoping that the momentum from the 50-day wasn't going to cross above the 200 here, because that would have totally changed up this whole thing here. If it comes back around 137 or so, sure. I would say your best bet right now is going to be do a little bit of day trading once it finds a pattern. So you could either try to, let me get this actually. There you go. If it breaks out of there, awesome day trade. You can see right here as well, nice little downtrend. As long as you can try to play that bounce there in the short term, but I'd be careful with Tesla. It's just getting more and more difficult to trade because there's too much news coming out. And when the news is coming out, it really messes up some of these, how it's able to kind of hold up against those support and resistance levels here. One thing I'd say, go over here very fast. Let's exit all this out. We don't even have support down here until 100. Yeah, we could see Tesla go sub 100 this time. That'd be freaking insane. But that's just this is a bubble, I guess. Let's go right here. Actually, let's go right here. Anything else those are the highs, yeah. Monthly chart for you very fast. From way over here from the all-time lows. I wouldn't be surprised if it came back to 96 by the time this is over, if we have a really bad economy. Let's go all the way back over there. Yeah, and we broke down below that last one too. Yeah, held it there for a little bit, held it there for just a couple of months. Tesla's in peril. I mean, honestly, if we have another bounce going into January or maybe even the end of this month, I'd probably buy puts a month out, 2 months out, and see how that's going to work out. But they should hold up better than other EV makers because they do have a good supply chain where a lot of other companies don't, as far as batteries are concerned and stuff like that. But yeah, it's going to be a pain for Tesla. We're just experiencing more breakdowns. We're heading for a support zone, but that support zone in and of itself may not hold just because Elon may tweet something that just crashes Twitter stock or Tesla stock. It's kind of in a weird spot right now. So it's very difficult, but you could trade it. Just day trading seems to work better with me, especially on those 4-hour charts. Just play the breakdown, the support levels. There's a whole bunch of different things you could be looking at here, but right now, as far as day trading is concerned, I like that. And I like that. If it comes down here, maybe on tomorrow, sure, I take a day trading opportunity, 4-hour chart. Hopefully it holds for 1 or 2 days. You could do 2 days if you want to, but hopefully it holds and bounces up. Actually, let's go through here. Let me just double check. 1 day, 2 day, 3 days, perhaps. Actually, maybe 3 days here. See right here. Because you're not really buying the exact moment it actually hits the line. You're kind of buying that zone, right? You're kind of buying when it gets close to it. Tomorrow, if it gets around 143, 142, perhaps, then I could buy some and see what happens going into Tuesday. But be very, very careful with it. This thing, it's a beast within itself right now because it's just so chaotic. That should be fine for now. We can leave it there. What's it here? But yeah, Tesla for a bounce. Yeah, it's due for one, but it should come back down a little bit more before that bounce occurs. Sometime this week if you want to, but for day trading, day trading right now unless we're going to have some type of Christmas miracle. All right, but let's go over here very fast. As far as Apple, that's Bitcoin and stuff. There we go. So you can already see Apple broke down. If some of you guys did trades off of those, I did day trades. We had talked about them a little bit, but it's mostly just been day trading for me. So, which is like less than, like, I guess day trading for me really means 2 days, 2 days hold. But if you go over here to the hours chart, broke down, take a put position. Yeah, Elon Musk just tweeted about something here. Elvis is in the building. Okay, so I don't know what's going on with Elvis. But you see, you took the put right here because this is open market, pre-market, excuse me. You just write it down a little bit, and I don't even think I wrote it down the whole way. I wrote this thing down to, if I can remember where it was. Right there. And you can see I missed a lot of the movement. Multi-day, missed a lot of the movement. Even though I scaled out, so here, you can see where you can obviously see that level of support. But, 50% was gone right here. The next 50% was gone right around there, actually going into it out. So I'm being very cautious, very, very cautious, because Tesla's and Apple and all these stocks, they're irrational in my mind, right? You can still trade them, but they're still irrational. Because even going back over here, when we first broke down off of this support level, that was a nice play, but that was 1 day, 2 days, you could have maybe sold off there. I sold off here because I was a little bit more afraid, and I was like, hey, we're entering into this buying zone, a capitulation towards the end of the day, short-term capitulation. Why not just take my chances and sell? So for now, as far as Apple's concerned, pay attention to this. We just broke down, okay? I didn't open up any trades on this because I was kind of worried about the SPY and the NASDAQ hitting those support levels come maybe Tuesday. So we might have 1 day of going, but I just don't like to hold options over the weekend here, especially with news coming out. But even though we broke down, actually, I can use this one that I accidentally put up here. There you go. There you go. Is that the point? Yeah. We're like barely holding on, so maybe you can consider this a 1 bottom, 2 bottom, triple bottom. That's another reason right there. So if we do break down below this 134.38 level, you can definitely do a put on that one. I'd probably say it 130 put expiring this Friday, day trade, or maybe 2-day trade if you want to. Personally, me, I would be doing a day trade. I'd be setting an alert for a breakdown right there, though. And my price target would be just around $129, probably $130. And as soon as it gets to, if we're doing 130 strike price, the price already is going to be around 134. As soon as it gets to 131 or 132, I'm already scaling at a portion of it, and I'm going to be out by the time it hits 130, unless I want to take some chances and hold it for another day, going into Tuesday, okay? Or another day after, the day after you buy it. All right, now, if there's any good news as far as Apple's concerned, let's talk about that. Because we're about to have another death cross here on the daily chart because it's all been clumpy. I mean, we have this downtrend here, but it's not really much, right? It looks like it's going to take some time for us to get back up there. What I would say here is, if you want to wait towards till the end of the day for Apple, you could also buy 138 to 140 strike price calls expiring this Friday. And if we manage to hold maybe around the 134 level and you see a bounce, this might happen more on Tuesday or Wednesday. Oh, no. Yeah, more on Tuesday. So you might look for 138, 139, 140 strike price calls expiring this Friday. And you'd want to buy them on Tuesday if it shows that we've had a bounce off of those support levels we talked about as far as the NASDAQ and the SPY. If it looks like we're bouncing off of that, I'd buy Apple off of that news, but I wouldn't buy it solely off of the news that Apple itself was holding. I want to see Apple, the NASDAQ, and the SPY hold. If the NASDAQ's breaking down, or a SPY is breaking down and Apple manages to hold, I would assume that Apple's just going to follow it, but it might take a couple days. So any buys I do there for calls would obviously just lose a lot of money, in my mind, okay? So that's how I'd be looking at that. And then if you guys do want to do a swing play, I would wait for some type of higher low situation to set up. So we bounce, higher low, do it, excuse me, and you do just your typical Fibonacci extension tool here and then play it out as it goes back up for Christmas. I'm a little bit more cautious here about that happening, but I do think it's worth looking at calls here as well for Apple just because we are looking closer to those support levels. So Monday could be bad, Tuesday's good, Wednesday's good, Thursday's good, Friday's good, and then I think the market's closed from Monday if I'm not mistaken. All right. Going back over here to Microsoft, this is one of those weird ones where it's kind of in a short-term trend, and you can see we've kind of broken down below that as well. I was trying to see if we might actually just continue this little upward move here for a little bit longer. Did not happen. We got rejected off of that 200 here. You're going to see the 20 crossing back over, and I expect by June we're all the way back over here around 223 or something like that. For now, though, we have this nice golden cross. After the cross, we had a pretty solid pump. I'd be looking for a nice support level here if I wanted to buy back in, right around 237 or so. If it does bounce off of 237, this local support that we had, I would have 240 strike price calls expiring next week, not this week, because we still got plenty of time before the 200 squeezes us down. I don't think we're going to be able to break back above that sucker. We got rejected there. We got popped up here just to have a double top, it looks like, and a nasty fall back down. Let's see. Yeah, because this was a little bit more rational too. That doesn't matter anymore. Let me plop something up here very fast. Really haven't had a decent pivot since 2009, have we? Microsoft is usually a trooper. Let me do this very fast. Normally we've been doing all these GAN boxes on stocks, but crypto works just fine too. Wow, we gotta go back. So 720 really isn't gonna cut it here, is it? Nope. Alright, we gotta go to my brain is broken, but I assume it's 1440. Yeah, 1440. 14. You know what? Let's not do this yet. Okay. Block bar, price bar ratio. If I squish it down a little bit more, it should work a little bit better. Okay. There we go. I don't need to go all the way up that high. Box, magnet. There we go. Nope, thought I could glitch the system, but apparently I can't. Okay. 14. Oh my gosh, please go to 40. There we go. Okay. And now, well, see, we're at 0.42 and it gives us way too much. Remember how we were looking at it for Bitcoin? We had to go to the hundreds. 0.2? No, not enough. Okay. Looks like we gotta go 0.4. There it goes. Okay. All right. I wonder if there's anything good here. No, it's not even honoring the boxes. I mean, a little bit there, a little bit there, a little bit there, but when you see these huge big moves like this, it's not honoring anything. One last thing I may try here is angles, see if the angles are working out at all. No, Tesla is going on its own path here. I guess I could always try to not go back too far. See, Microsoft, maybe not go back as far there, but that'll take too much time. Dan square, a bit right there. There we go. 180, 360. 360 should be the front here. We're at 0.67. Let's extend that out just to 1 to make it easier for all of us now. That kind of matches up a little bit better. That matches up a lot better. Okay, okay. Alright, so guess I can't split it out even more, but that'll be fine for now. Again, box. Let's go to the bottom. That's not matching up. There we go. Little high, I know, but it'll do the trick for us. Okay, my brain's gonna keep hurting if I do keep trying to get that to be precise. Let's get rid of the angles. They don't seem to be helping us too much here. All right. We tried to hold that range of the orange, which is something we looked at a lot with Bitcoin. We're hitting a time from wave here too. Heading to. Yeah, okay. I think, let me get this. Back to log, looking all pretty again. Oh, much better. I think Microsoft may have an opportunity to do a double bottom here, going into January perhaps, and then after that, kind of fall and flail around a little bit more depending on how the earnings go. But for now, all I think you guys need to focus on is that it's kind of following that same move of the Nasdaq as far as nice downtrend. Every single time we get close, it gets knocked back down, and then on top of that, we're still in this downward channel. I think if we go off of some of the Gann squares and stuff like that too, we have some support levels. But if we do break down below here, I mean, we're heading, back down to 180 or so, back down to like this zone. Well, I guess that should have been a little bit higher. That's going to be, I think, your buying opportunity if the economy doesn't get too bad here. Daily Wire said Elon is going to step down as head of Tesla based on poll results. 58% said step down. Oh, that'd be interesting. I mean, I just don't know what Tesla's going to do without Elon. He really has launched it and got everybody talking about it. But if he wants to leave Tesla, I mean, I don't think he would feel terrible about it. Mostly because, personally for me, I think he likes Tesla. It's made him a lot of money. He's made them a lot of money. I always felt like Elon's passion was what's it called? SpaceX. SpaceX seems to be his passion project. Everything else always seems kind of secondary. Now I was getting into Twitter, but I'd be fine with that. I mean, I'm not going to own a Tesla, so I guess I don't really care about Tesla. But yeah, I could definitely see that being a possibility here. But as far as Microsoft's concerned, going back to that, I'd like it to see a bounce somewhere around 237, or excuse me, 238 to 241. I would be looking to buy calls if it does bounce off of that. Again, bouncing with the indexes. If we decide to break down and the indexes decide to break down, I'd be buying 235, 233 to 235 puts expiring this Friday and trading them for 1 to 2 days. Probably at latest holding it until Thursday. The latest. That'd be a really big thing for me to do that. Netflix just broke down here after kind of having a false breakout here and then getting rejected by the resistance levels up there. I would probably try to buy some Netflix if it does come back down to 276 here. It's at 290 now, so that is a dollar amount coming down, so to speak. That's a whopping 5% in like maybe 2 days, which can definitely happen. Just be careful that it wicks if you want to buy down here. So if you want to buy right this and don't want to trade the breakdown here, what I would say is have an alert set for 276.32 if you want to be specific. If it taps on that, see if it's breaking down, then I would probably buy puts around the 265 level until it comes back down to hit some of these support levels down here. Personally, buying calls around here, I don't like it too much, primarily because what's about to happen here, even though you guys can see the 20-day moving average isn't really too strong as far as a support level or as a resistance level. It's just kind of there. We are going to have a death cross here pretty soon. And on top of that, even if we don't, we're going to get squeezed by the 20 and the 50. Since the market's kind of tipping off right now, I'd assume we'd be coming back down. I'd be more inclined to buy 270 to 265 puts expiring 2 weeks from now if you guys wanted to do a longer play. But really, the play I'd be looking at here, just because, again, I'm more cautious, the breakdown from here to here, kind of testing out this zone right there, that's what I'm going to be looking for. And then it might even bounce and make, let me just get rid of some of that stuff that I just put on there. All right. So where I'd expect we have another bounce in the future, and that creates a new trend line based off of maybe some support that we get if it does break down like this. That's what I'd be looking for. Who knows what will happen over here in January. We still have to wait for a lot of earnings to come out and a lot of economic data. But I'd personally want to trade this portion of it. That breakdown to this. So that might be 1 to 2 days of holding right there. But the alert would be around 276.32, okay? Now we can have a clear idea of what's going on. But I would be very careful because I want to see it break down and I want to see it look like it's going to close down below it. So I'd open up these put positions towards the end of the day. Unless you guys were looking to do the other thing and play the pop off of that most recent support level that we just had over here on the 277 range. For that, it'd be at 285 calls for maybe 1 to 2 days. Probably just 1 day, honestly, as it tries to bounce off of that. And that's what I'd look for. Maybe even a day trade for like a half an hour or so, bouncing off of that support before it eventually tries to break down below it. I doubt we're just going to plummet down below it unless we're somehow in pre-market hours. Or, pre or post-market hours. All right. Going over here to Amazon, I feel like Amazon's something in like true peril that we don't really talk about too much because we've been kind of looking at Tesla for quite a bit, right? Just like Tesla, just like a lot of the NASDAQ plays out here, we are in a downtrend, but you can see how it really hasn't kept some type of semblance of a downward channel like that. It's kind of just opened completely up and the support has been falling apart. So for Amazon right now, oh man, we gotta go to the monthly chart for this. I haven't done this in a minute for Amazon. I normally don't trade Amazon because for most of my trading career, Amazon was like thousands of dollars. I never felt like it was worth my time to necessarily just trade something that was worth that much money. Meanwhile, Tesla was low, in the hundreds, and that's much easier to trade. All right. Here's the monthly fibs. Some support that fell down, some resistance. Had support there for a month, and now we're falling back down. If you want a really strong opportunity to buy Amazon, I would really consider buying it at $72. Now, I know you're like, whoa, that's a long way down. it used to be at $188 or $190, and now it's going to be down at 72. Yeah. That's definitely going to be a possibility here. That'd be a 61% drop from high to low. That's not unreasonable if you ask me. Just because, of how much tech has been blown up over the last few years, it seems reasonable that it really could come down to $72. This is post-split too, so. But you see how we're about to have a monthly death cross here? Give it until like Q2 May, something like that. We haven't had one of those since like way over here in 2007, and even that took a while before it even affected. I would say it didn't affect it much at all. It's usually a lagging indicator here, so maybe if we're lucky, just like how we talked about it with the SPY and NASDAQ, maybe we'll have the big move down before the cross happens, and maybe we might come down a little bit more. But I really do think it's a realistic, it's a good possibility that we come down to $72 or so. Now, let me go over here very fast. Yep, didn't mean to do that. This is the longer term one. If we don't put log into there, it's all the way down here at $40. I don't think we're going to be coming back down to $40, but we could if things get really, really nasty. I just don't. I think we are. So what I'd say instead is, let me clear that out of the way. Where's to this pivot from way down here? See how we bounced off of this for a little bit? This one is around $72. It really shows us that we don't have much support here, unfortunately. Let me try one other thing here. Yeah, we have a little bit one right here around $81. And this one, it's not as reliable as the other one. You can see failed right there, worked right here, worked right there. But this failure right here, just a little bit of a red flag for using this. But we do have another support level that backs it up. So actually, I would add a little bit more strength to this specific level around $81. If you wanted to have a solid bounce off of Amazon, at least for 2 days or so, 2-3 days, maybe even a week for a pivot, like something like that, where we go back into this bear market rally type of mentality, which will be more difficult the next time around. But I would just wait for this to come from $87 towards around $81, $82. Now, the real level is $81.18, but I would say $82, maybe $83. You buy $85 to $90 strike price calls expiring this Friday, and you play that out for maybe 1 to 2 days and hope for a bounce, something like this. And you notice that when it bounced, it's not like it just went ricochet all at once. You'd buy right here at the support and you'd rally that up. And if you bought down here and you sold right there, that's about a 10%. Oh, see, this is a weekly chart. Let me go back over here. There you go. Actually, let me go to a 15-minute chart so you guys can see this a little bit more clearly. Auto. This is okay. There we go. Okay, opening. So you buy it right around here. By midday it's up 4%. At the high, it's around 8%. That's the type of rebound you're looking for. But honestly, depending on how you guys want to play this for short term or long term, either way is fine. But just know that short term is easier to make money. Long term, you can make more money though. You're gonna start looking at some multi-hour charts and say, hey, where's the one price target? It's right there. You could sell right there. You could hold on if you want to. You see it actually came up to the next level. But, is the theta decay going to really hit you hard or not? So that's how I'd play it with a short-term multi-day if you want to. Otherwise, I'd be happy to just buy in the morning, sell in the afternoon, get some nice profit. There's other Fibonacci levels you could toss in here as well if you're going off of a 5-minute chart for like day traders out there. So in this example, it's going to look very ugly, but, high, low, aim for one right there. It held for 1, 2, 3, 45 minutes before breaking out, going up here. You could do that as well. That's what I would be doing, except for it would look a lot different because it's on a 5-minute chart, of course. And then at the end, we did come back up here to the orange level, and then it did make its next move up here, and that was more of that to the high, the low, high, low type of move that we saw. Each to each their own, but for now, reversal plays seem to be on the horizon coming into this week. More more I think I spoke too loud in this mic and it has the gain too high on there. More going into maybe Monday, Tuesday, watch these support levels and see if we can bounce off of them. Going over here to MU now. MU, I don't even know if I actually like MU to buy right now. I really don't, because this already had the death cross a while ago. It's kind of into this choppy news. Mm, mm. I don't really want to buy MU until it goes here in 2023, honestly. But I thought about this a while ago, like 2 months ago. Um, let's just go to the daily chart here. If it does continue to go down, I would only really buy this if it does come back down to $48 or so, maybe $49. That's the balance I'm looking for. So maybe within this range right there. If it comes in here, it could be a buy. Red flag, though, being earnings. How have the earnings been doing? I don't remember good earnings coming out of them so far. Not much good earnings there. No, gap down for earnings there. Gap up there, but that was that was last year. Yeah. You're going to be taking a gamble on MU if you want to play with those earnings, but you definitely could. I'd probably assume. Let me see. Oh, whoa. Yeah, there. You guys. Oh, it's like blocking. Look right here and to their earnings forecast. You see how they've been okay so far this year, but now the forecasts are starting to go down a lot more. Uh, that's what concerns me. It's already been priced in that they're going to be worse than before, and actually they may be losing money. They go from positive to losing money. Um, I would just be careful because they've beaten once, twice, 3 times, maybe 4 times. They've beaten slightly. It's going to be that guidance though that really drives this thing up or down. I'd say do a hedge. $45 strike price next Friday, $55 strike price next Friday as well, with more on the put side. No, with even split. But I'd be careful with it. It does not seem like something I'd really want to be trading right now. I think we're good. Yeah, we're good. Okay. But yeah, MU is something I want to see a little bit more of, but not not right now. Um, let's get it here very fast. So, if you guys, sorry, my phone's still blowing up. If you guys wanted to do something longer term here, and you guys felt like maybe the market's going to take a turnaround for the worse, I would highly recommend for long term puts. Like the only long term puts I'd probably recommend for like multi week holds. Would be expecting Nvidia to break down completely from this uptrend it has and head all the way back down here to like 140 to 135 level for like a loss of about on the breakdown about like 20%. I don't think it would fall the whole 20% while you're holding the options unless you did like a multi-month type of thing. I don't want to do that because the market's so kind of crazy. I just don't think we're going to have this golden cross here between the 20 and the 200. So if we do break down from here, everybody, I would do 2 scalar opportunities as far as this is concerned. But if we do break down from 162 levels or maybe 163, just out of this downward upward trend, I would open up puts with maybe a 150 strike price for not this week, next week, or the week after that. Probably just 2 weeks out, so not this Friday, but next Friday. And then I would see if it comes back down to 150. I would try to scale out around 50 to 60, maybe even up to 80% of my puts at that point because we have the 50-day moving average here. And then if it does continue to break down with some bad news or something like that, then of course I'd scale out the rest. But I would have a pretty decent price target of maybe 150 to 155. And if you're having these, if you're opening it up around 163, that'd be a pretty strong profit, especially if it moves down in like 2 or 3 days. We've already seen a movement like this. So over here, just within 3 days, it fell down 12%. The big thing here just being that, again, the NASDAQ and the SPY are close to their support levels. So we'd want to see those also breaking down towards the same time. Otherwise, what may happen is you might just have something of a false breakdown where, it looks like this. It looks exactly like this. Where maybe we're down for a little bit, doesn't break, but we still manage to pop our way back up, which means it's going to be better to watch it towards the end of the day. Because on this one, we already broke down. We broke down on Friday. However, the way this always works out is now we have to look at that one there, which is around 161, 162. But Nvidia is something I'm pretty bearish on going into next year. But, this thing has been all over the place, like all over the place. It can really tear you up if you're not ready for it. Sometimes it has these nice little trends there. So you have that nice little breakout. But other times it does this really stupid stuff where it has a breakout for like 2 days and it decides to crash back down. So it can be very, very wild. But as far as puts are concerned, 150 strike price puts expiring next Friday. I don't think they're too expensive. That's something I'd be looking at. This is probably the thing I'm going to be looking at the most going into next week, as well as Apple and Tesla. But those are day trading opportunities. This is going to be that first full swing trade. And so what I'll probably do for tomorrow is I'll open up a position with some puts even before it breaks down here and just see how they do more as a gamble. And then if I'll double down, so to speak, if it does break down going into Tuesday or Wednesday, if we do see a breakdown below the SPY and the NASDAQ as well here. SpaceX is Elon. Hey, Butford. Yeah, exactly. So I think that he'd be more unlikely to kind of go to that project than he would Tesla. And, the bad thing about Elon, or not just Elon, but it's like we only have so much time in the day to really, do what we want. I'm usually working for about 10 hours a day. Then I'm sleeping, playing with Loki, playing video games, whatever I can do to de-stress after a long day. Elon's probably working like 16-hour days, minimal sleep, and then starting to get to him because he's human. But if I were Elon and I was going to give up one of the things I'm managing, it would probably be Tesla. Not because it's not important, but because it's not really. It's not as cool or innovative as it once was. The industry's catching up, even though they're a long way ahead, a long way behind. Me myself, when Elon posts stuff about Twitter or Tesla, I look at it, but I'm not like, oh wow, maybe with the Tesla truck, But when he tweets about SpaceX, I'm like, ooh, I want to see this launch. Ooh, I want to see this thing happen. When he tweets about Twitter, I'm like, ooh, yeah, I'm a content creator. I want to see what would happen if I publish videos on Twitter down the road. That type of stuff, right? All right, maybe let's go over here very fast. AMD just broke down here. This one was pretty interesting. This has been like a day trader's dream / nightmare. A day trader's dream, a swing trader's nightmare. Let me say that. AMD just broke down out of this longer term trend line right here, in which it was actually holding up pretty well, right? Held up perfectly, had the big boom here because the whole market was going crazy, irrational. We got rejected off of that resistance level over here, and we've had a few different breakdowns. I feel like this one may be going more into a trap type scenario because of those support levels. However, if we do manage to break down below these support levels of maybe 64.28, that's where I would look to open up some puts. This zone right here would be my loading zone. And then anywhere between 64.28 and 62.92, I'd probably start opening up some puts going into maybe the $60 strike price range for about this Friday. And then I just play them for day-to-day trading action. And then maybe you can do $58 strike price for next Friday. Not this Friday, but next Friday if you guys really wanted to go down that path. But for now, if you go over here to, let's just say, the 5-minute chart. it just has these weird floors right here. So you see that resistance level built up into support right here, support right here. When it finally did tank like that, this is more of a news event, right? It tried to recover, wasn't able to come back down here. It's kind of a slow grind, slow grind. Last few days, definitely not my favorite for it. The lines are moving as I adjust, so just bear with me here. But it's these types of plays like that which I've been liking. If we do maybe an hourly chart, would make it look a little bit nicer. See at this right here? We're testing it out. If we break out of this, that could be a good half an hour hold on a call. If we get rejected from it and we start to break down out of some type of pattern that's been accumulating over here, so maybe something like this, that could be a cool, half an hour put option hold. But for now, I just want to see if it manages to break back out, or break back up. Excuse me. Well, see, I don't even know right now because of how these lines are. No, these lines aren't matched up, so the first one made more sense. But yeah, this might be a loading zone for some of you guys between $63 and $64.50, basically. Anything with Facebook? Facebook's been really weird lately. It went up like 3% the other day. So we're kind of back up to the gap down place. So we filled the gap. Usually after we fill a gap, we're coming back down. I'm not gonna actually do anything bad or puts on Facebook here until we break down. But this golden cross has me a little bit more confused, especially on the 4-hour chart. You see the 20 and the 50 about to cross over between the 200. And you see this right here. We might have a rational event coming this week where we actually do continue to break down, even though the technicals are saying, let's go up, let's go up, let's go up. Kind of what we saw over here. You see the golden cross. And then, of course, we just kept it coming down because the market is still a bear market. Golden cross right here. We still kept on coming back down. Golden cross right there, kept on coming down. That's something I'm kind of concerned about with Facebook. Not many stocks have this bad history with death crosses or golden crosses, excuse me, but Meta definitely is one of them. That's why I say it will probably still get rejected off of this 124 level, and then we'll break down. So I'm kind of more inclined to buy puts on this around the 115 strike price range. I'll probably even open these up on Monday or Tuesday if you want to play them for a swing for Friday. But if we do manage to close above 124.48, I'd be willing to buy a 130 strike price that expires this Friday and do a couple day trades off of it for maybe 1 to 2 days, primarily 2 days for that one, as weird as that sounds. But I would just say be careful of Meta right now. It's just kind of the weirdest thing. You go over here, you see this retracement level. If it manages to break down below 115, I think we'll probably have solid support between 110 and 105, probably even closer to 108 to 115 for me personally, as far as like a scale out zone. But be careful with Facebook, everybody. A lot of these different plays out here are going to be all over the place, especially because some technicals are suggesting golden crosses or bullish moves, but the indexes themselves are on the verge of breaking down here. So it's really, do you think that the SPY and the NASDAQ are going to hold up, or do you believe that they're going to break down here over the next few days, and then we're going to have a bad end of the month, right? And to finish things off here, just to look at the oil stocks, oil is actually just holding its support. It's not looking too crazy. I think people are trying to price in the fact that they think oil is going to go up even more in 2023, like break above these highs for like different stocks out there. And so everybody's saying, hey, I'm going to buy right here and hope that we bounce our way back up. Just like when we had our last death cross over here, right? We were low, but we just kind of bounced back up. Last death cross over here, bounced back up because of the irregularity of these oil markets and the fact that as soon as we start opening up again in February, March, and after the winter, people are going to be going back into what's known as driving season, where they start to drive more, springtime, out and about. People feel like oil may spike back up there. Now, I'm not really buying any more Exxon and stuff like that. I only have maybe 20 to 30% of the Exxon I bought at the beginning of the pandemic. However, I am holding the rest of my Exxon just in case we have another strong move. I don't think oil is done yet, but we're going to find out if it is done or not. I continue to add on to some of my oil positions here every now and again. Like PXD, it's back into that lower trading range. I'm buying up some of that for long term. Long term, ConocoPhillips over here has a little bit more to come down. Already had that death cross. Not something I'm really buying here just because of the formal breakdown we saw. However, I do think we may find an opportunity to buy some more of this later on. Stuff like Oxy, though, a lot of these different stocks out there in oil, they're all heading for these support zones. So I'm buying some where I can to make it a little bit easier on myself. See. And hey, Ken, do I think if Elon steps down, the coast will be clear for blue check marks to openly buy Teslas, causing the stock to moon? Wait, what do you mean by blue check marks to openly buy Teslas? What does it mean when a blue check mark buys a Tesla? Causing the stock to moon. I don't know what I don't know what that means. I don't follow Twitter's connection with Tesla all too much as far as blue check marks. Like, oh, do you mean that like people that don't like Elon would be more willing to buy Teslas knowing that Elon's no longer part of the company or no longer the CEO of the company? I see what you're saying. Okay. Um, I don't get jokes, dude. I take everything too seriously in life. It's one of my many faults. I do think if his name is moved a distance, I would say from Tesla a little bit, I do think it would help the stock price. I don't know what that would do to the innovation behind Tesla though. That'd be the concern. So it might help it in the short term, maybe next few years, but going on into 2025, 2030, stuff like that. That's why I could see Tesla slowly start to lag, and it kind of almost end up like Apple firing Steve Jobs just to ask him to come back later on. Uh, but I want to see SpaceX go public. I want to see Neuralink go public so I can invest in it. It's just there's so many requirements and rules to do that, which kind of sucks. I would say that I'd rather have Elon leading Tesla than not, but I understand that his time has been all over the place because he just bought Twitter and he's been forced to do a lot of work. So it's kind of you kind of have to deal with this downward pressure for a while, especially since the market itself is in a pretty bad spot and interest rate hikes are not going to be slowed down at all for the next few quarters at least. Right? The Twitter lift? Oh, yeah, probably. I mean, people say all this stuff about Twitter and then they just kind of go back to using Twitter. Like the amount of people that like the amount of people that don't like him that cling to every single one of his words, that's what's really confusing to me. Like, why do people let him get inside their head? You can I like Elon personally. I think he's great. I like what he's done for for technology and stuff like that. But if I really didn't like Elon, I would ignore him. I wouldn't tweet about him every single chance I got. And so because of that, I believe he's using that to show to pump up Twitter and say, hey, look at all these daily active users. People are coming back. There's more downloads than ever before. Yada yada yada. That's what I think is going on right now. And I know user growth has increased and daily active users has increased. It all really started to increase when he just announced he was thinking of buying it, not even buying it, because I think back in, after Trump lost, people really lost interest in Twitter because they felt like the Hunter Biden story or something like that was, which I guess now we know it was kind of all messed up the way they handled it. People just kind of lost faith that Twitter was a good place to go and learn information because it felt like Twitter was turning into a CNN, type of environment where they kind of corporate propaganda, I don't know what you want to call it, where they kind of tell you some truth, but most of it's kind of a weird lie, if you will. It's that type of stuff. But now that Elon's in control, he's making mistakes right now. I'm not going to lie. As much as I like the guy, he's not perfect. Those are things that he's going to have to navigate, and so are we as users of Twitter. But for most people, it's not like I'm looking at Elon's tweets every few minutes or something like that. You just kind of ignore the guy if you don't want to listen to him. Uh, Tesla's future is his visions. Also, the bots were cut. Real people came back. That'll be interesting to see how that works out. I haven't really been seeing so many bots on my Twitter feed, but I don't really go into that side of Twitter that gets much bots besides the fact that I'm a crypto guy, which gets lots of bots in there as well. But hey, okay, everybody, make sure to rewatch this video, especially towards the beginning when we were actually going through more numbers here. But get ready for a week where we're testing out some support levels, probably Monday or Tuesday. If we have a really bad day tomorrow, it's probably the opportunity to buy those option plays because they'll be hitting those support levels for a rebound. If we break down tomorrow, be very careful, okay? But if we kind of crash tomorrow, like a mini crash, and we kind of hold those support levels, that's where I'd be buying. And then going into Tuesday, if we'd have a subtle Monday going down and Tuesday we go down, we tested those supports, I'd be trying to buy those supports for day trades. If we decide to break down later on through the day, you can always switch it up and open up a put and make some good money off of that. But just be careful with it. This week has a lot of interesting news, especially the CPE, which nobody ever talks about, but inflation for businesses out there. That's going to be very, very interesting going forward. If it's very, very good this Friday, we could actually have a very, very good week Monday, or a really, really bad week next Monday. Oh, sorry, starting next Tuesday because Monday's the market's closed. Yeah. Let's see. A lot of billionaires are publicly screwing up lately. Yeah, but they're billionaires. They all took risks to become billionaires. They're still all taking crazy risks like they were never billionaires. So that's how I think about it. But yeah, they are all messing up right now. And you don't mess up when the economy is bad because people that are less fortunate, they definitely look for a reason to be mad at somebody who has a lot of wealth, right? And those are like social media. There's a whole niche of people out there who go after rich individuals for making money. It's just the way it is. And they have to deal with it one way or another, right? All right, everybody. I'll see you guys a little bit later. I'm going to go eat some